Welcome back to Next Gen's Year in Review for 2024. It's now time for a special Year in Review under 30. And joining us, as always, is George Tsilis, Senior Markets Correspondent. And we're looking at a space, George, for those who've followed our program throughout the year, that we've come to a few times here with you, which is the cruise line space. Now, varying degrees of success, but it does seem pretty much success across the board for all these different public companies.
Yeah, I mean, if you look at this entire group over the last year, I mean, primarily the three larger players here in the United States, Norwegian, Carnival Cruise, and Royal Caribbean, all these stocks have been higher, respectively all year. And if you look at price performance, you're actually seeing across the board all into the upside in the double-digit range, with Royal Caribbean up over 80%, and of course Norwegian higher by over 30%, but nonetheless, it really fits the profitability profile. If you consider this entire group over the last year, all three of them have actually produced GAAP profits. In other words, their unadjusted profits have been positive. Top line sales have actually been growing, and they've been firming up their balance sheets. And the demand for cruise lines has actually been quite remarkable, to say the least, over the last year, with occupancy rates very high. You have long-term bookings. For instance, Norwegian offers 180-day bookings for those who are looking to travel, let's say, for half the year, and this is giving businesses like cruise lines the opportunity to provide visibility on their sales. And the fleets are increasing, but they're increasing at a slower pace, adjusting to the, of course, supply and demand dynamics, which were all out of balance going back to the pandemic. So what we have here is a situation where the companies are becoming more profitable over time, and that's translating into better price action on the chart.
And George, I'm glad you mentioned the expansion somewhat easing here, because I just learned, frankly, I find this amazing that Norwegian only has around 18 ships in its fleet total. And to me, that's tiny. And it is tiny compared to Royal Caribbean. But has that been somewhat of the recipe for success? Because Royal Caribbean, with a much larger fleet, has done better on the year. Norwegian has done worse, although still done well. So is it having more and more ships that are able to continue to have these voyages that has helped some of this debt load? Because Royal Caribbean has somewhat really formed a league of its own here as far as just its performance in 2024.
Very much so. So, yeah, the number of cruise ships makes a huge difference. Actually, Carnival is quite large. They actually generate the most revenue out of the three that we're talking about today. But when you actually look at the returns to shareholders, which is the net income, it's actually less for Carnival, despite the fact that their top line sales are about $24 billion. If you compare Royal Caribbean, their sales are around $16 billion. So their sales are actually higher for Carnival, but their net income is lower. And that basically translates into what the company has to pay before shareholders receive the residuals, which is net income, and that's debt. So if you look at Carnival, irrespective of the fact that their sales are greater than Royal Caribbean, price performance has been less because essentially they're the most debt-laden out of the three businesses. So ideally speaking, the performance that we see on the chart reflects the net income performance of the underlying stock that's better performing at the end of the day, irrespective of the revenue base, and that's Royal Caribbean, because the company didn't go into the pandemic with as much debt and has actually come out faster with less financial strain from debt, and that's really been very valuable to shareholders who've stuck with the company.
Yeah, and like anything, George, less leverage, you're going to be less exposed in the tough times, but you want that leverage when things are going well. So excited for 2025, and time will tell if this rally can continue. George Tsilis, appreciate all you've done for us here in 2024. Always a pleasure.